get after it, guys. Welcome, and gals, welcome to another episode of Market Power Hour with the one and only Josh and SCHMITT'S. We have a good one for you today. Today is the, what is it? March the, I've already lost track of time, 22nd. And the markets are doing some weird things. I'm glad we're here to all conversate about them. Bitcoin currently 63,500. It's had some ups, it's had some downs. So today we're going to get into the charts and kind of take, different perspectives and hopefully give you guys a little bit of alpha to work with. And I'm sure we all see things just a little bit differently. And somewhere between the three of us, maybe you come up with a pretty good plan. I'm a big believer in you guys having a plan before you actually need it, before the time comes to make a trade and execute a trade. So that's why we do these things. So you can, take your notes and be prepared for what may come. So anyway, with that being said, guys, thank y'all for being here. You want to say a quick howdy do, little welcome?
How's it going?
Howdy doody.
Banger.
Howdy doody.
Banger. Chat, by the way, don't miss Josh's upcoming video on all the Soul NFTs.
Yeah.
He's going to go through every one of them top to bottom. And,
Yeah, A to Z.
and
All
ri-
the meme coins as well, A to Z.
and risk a permanent YouTube suspension. But
Jesus.
he said it was worth it for you guys. So just as an FYI. Okay, so I guess I'll start it off with the charts. I'll do my part and then we'll go around the horn, huh? Is that what y'all want me to kick it off?
Speaking, can we just say, like, what the hell's going on in Soul right now?
Yeah, I was just saying that, but like before we got started here, I was like, I've been around crypto a while. This is cycle number 3, and I've never seen anything like this. This is
What are you talking
the racist meme that's like NFT
Oh, I mean,
market thing.
dude, I don't know if you know this, but racism's been around for a couple of years now.
Okay, I'm not surprised at racism. I'm surprised that it's like they're just seeing how far they can push it and push it and push it and push it. And
Well, it's not like there are mods that are going to be like, hey, you can't make this coin, you racist fuck.
yeah. Well,
They can just do whatever they want. I mean, that's the whole premise of crypto, right? So
you
it's
know what
like the
it
Wild
reminds
West
me? It reminds me of the Call of Duty lobbies, like in the original days, like where the voice chat was on. There's 100 people in there, and they're all screaming at each other. That's kind of what these.
Yeah, dude, it's like going into Outpost and Rust and just turning on your VoIP.
It's always dicey to do when you're streaming, by the way.
Yeah, don't recommend it. But yeah, Josh, in case you don't know, the fucking Rust community is like 4chan, essentially.
Yeah, as much as they can be. Like, and they come up with new and creative ways to be racist and crazy. Anyway. All right, well, guys, thank y'all for being here. We'll get to it. Our goal is to get you in and out of here in about an hour. We are like 5 minutes in or so. So we're gonna kick things off with this. I am pulling up something off to the side and ready to go. Okay. All right, so let's go back in time. We are on the cusp of the halving. Everything is looking good. We're 25 days, I forget what exactly, but we're about 25 days from the halving. We, historically speaking, the time we're in right now has always been a really, really fun, exciting time, because right on the other side of the halving is when things get crazy. We're gonna get crazy. This is when we have party time and fun and girlfriends and Lambos and the whole thing. Dog, get out of here. And what we are seeing is something that's never happened before. We have a stark change of character. So here's 3 halvings, the one yet to come, and then the 2 before. Last halving, we had an all-time high, and then at the halving itself, we were about 50% of that prior all-time high. The cycle before that, this is back in 2016, once again, we're about 50% of the prior all-time high. Today, we have actually cleared the last all-time high and made a new all-time high. What is happening? I have no idea. Did I expect that? Did I predict that? Absolutely not. Not in my wildest dreams did I think we would hit a new all-time high before the halving. But I have what I think is a healthy amount of fear because of this. Because if the market can do it's got a new trick up its sleeve in a bullish way, it can almost certainly have a new trick up its sleeve the other way as well. So despite some of the, oh, the ETFs are going to take us to infinity and it's up only and all that kind of stuff. I have been very worried about just this aspect. This is kind of like a macro taking a step back, not really chart specific, but just thinking about this big picture wise and what it could mean, that kind of stuff. So because of this, I've really had my radar up for what could be signs of exhaustion, what could be signs of a top, even if all it is some sort of interim top, where perhaps we just got a little bit too ahead of our skis. All the moving averages are still very far down here. So even if this is just some sort of moving average retest or something, even that could be pretty brutal if you're in a margin position. Imagine going from, say, 72,000 all the way down to 50. If you're set up in a particular way, you get completely liquidated from a move like that, despite it being a very reasonable thing to have happen. It happens, lots of times. In fact, the 2016-2017 cycle, there was like an infinite number of retests of that 20 week that I was just talking about, through the entire cycle. So I've kind of had all this kicking around, and it's led me to where we are today. What I am seeing on the let's call it the medium time frame, and now bleeding into the higher time frame, I'm going to throw it on the 2-hour candles, which is kind of an eye roll, I understand, but taken as a whole, this is about 3 weeks of data. So we're about 3 weeks in this, let's call it a range. Before we get into what kind of range, let's just call it a range. So we're about 3 weeks in this range. Now what's happened is that we've started low at like the 15K range, which is the bear market bottom. This is like all the FTX shenanigans and all that stuff. We have come up. We had a really nice reaccumulation range, a breakup, a markup with some tomfoolery and reaccumulation again, or continuation pattern, whatever. And now we're up here. So we have had our accumulation, we've had reaccumulation, we've had a markup period, and now we're somewhere. And based on what I'm seeing here, I think this could be some sort of interim top. And this is nothing to do with what I want to think or believe or hope or anything. It has nothing to do with that. It is 100% chart based. Whenever I see, this sort of rising wedge, break back into a range, run the lows, kind of eke out a lower high. Now we're bleeding back down. This is starting to check a lot of boxes. We've had several failed inverted head and shoulders. There was, multiple attempts to barrel roll out of this thing and punch our way back to new highs, and it just hasn't happened. In fact, and I know Schmitty was talking about this, and he was right, that a run of the lows and then followed by a jump of the creek and a clear the range and consolidation. Like if we had woken up today and price was up here, this is 100% a great reaccumulation, continuation, whatever you want to call it, sort of setup. But unfortunately, we're seeing, this sort of like bleeding out. So my take as of today, which could change tomorrow based on new data, but I suspect this is a distributionary event, and this entire range is distribution, and distribution implies a visit to some lower level. Where that is, I don't know. If we do kind of our napkin math, which we've done for other distributionary ranges, and they have worked out, napkin math for this range from, call it the range low to range high, is about $12,500. So if we $12,500 this thing from the break, that puts us right around here. Right in this level, it's just under 50K. Now, I like that as a sort of ultimate level because that blows out all the longs from this level on. So everybody above this line is absolutely destroyed. And that may sound kind of counterintuitive. Why would that excite you? Why would you want to see that? Because markets don't offer free lunch. There's no free lunch. If you have this extended period of only one direction, you can almost bet something nasty is brewing. It's like El Nino is forming or something. Like there's 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 a debt that has to be paid. You can't go a year and change of basically up only and not have a big nasty shakeout at some point. So perhaps that's what we're seeing. That time is too early to tell. Distribution is not confirmed, by the way, until we start closing below the range. So even though it's doing, we're checking lots of boxes like an up thrust and a maybe a sign of weakness, maybe like you kind of have to tilt your head sideways and really go for it. But even though there's some check boxes we can give this thing, it's not confirmed until we break down. And what you'll also notice during any time we have distribution, you'll start seeing other systems, other ways of looking at it, start to come into alignment with what Wyckoff is pointing at. So for example, a lot of the pattern traders will be like, hey, you know what? This looks like a pretty nasty head and shoulders. And so now they're bearish. Maybe the Ichimoku only crowd will start seeing stuff on, their particular, hey, you know what? We're starting the cloud starting to change, whatever. Like, so this happens at bottoms. It happens at tops. You'll start to get all these different schools of analysis, and they all start coming into alignment. It's like a bunch of different dojos starting to agree on what's the best, like Kung Fu's the best or something. I don't know. But like everybody looks at it a little bit different. And eventually at these big rotational, big kind of like key moments, you'll see everybody starting to come into alignment and not in a, they get like pulled into alignment, not like they want to. Nobody wants to be bearish here. Literally no one wants to be bearish 20 days before the or 25 days before the halving. That's ridiculous. No one would want that. But the charts are what they are, and that's all we can do is roll with them. So I think Napkin math points us at about 50K and just under, maybe to blow out all these guys. If we look at where that would be for this last uptrend, oh, by the way, that's the 61.8 retrace. So that's not crazy. This checks a lot of boxes for like completely reasonable thing to see. The last thing I'll point out, and I don't know how to fit this all into, what we're looking at right here. I don't. But the yearly pivot is something I always like looking at. It almost always is hit sometime right within the halving, either right after or right before. It's almost always touched, and that is all the way down here at 36,000. We do have this kind of like weak trend line that points to it. Do I think we're going to get all the way down there? I really don't. It's not like I'm setting bids down here and I'm ultra confident of that. I'm not. We're not there yet. Perhaps we come down here and this is like a redistribution. And then at that point, we can have like a new measured move that puts it, I don't know, like we're getting way too far ahead. But for now, the only thing that I know that I'm feeling pretty strong about is that this looks more like a top than anything else. And I would love to be somebody that has to chase this thing as it breaks out. I am like very much hoping for that, because something like that would imply, much higher. And then we get back to Lambos and girlfriends and tendies and stuff. But for now, that's it. Call me Bear Jack, flame away. This is where I am. That's all I got, boys. That's the end of my bit.
Good job.
I mean, I don't think anybody can necessarily disagree. I think people who, like, I'm seeing it already. You talk about anything retracing any amount, and people are like, "Oh no, blah blah blah," right? Like,
yeah.
Like, okay, look, like it's not a personal attack on you, dear listener or whoever. It's just like, look, this is part of this is the market, literally, right?
Yeah.
Stuff goes up, stuff goes down. Your goal is to try to be on the correct side of that, or just do nothing. Do nothing is a perfectly viable option. The do nothing people will likely outperform the people who try to trade this over a long period of time, aka the holders. The holders will win, right? So
Yeah,
this isn't like encouraging people to try to, like, take a hedge here and short here and use leverage here. No, okay. Like, look, I get it, because I'm already starting to see that and hear that, because I'm more in your camp here. I guess Smitty, do you want to go next?
Yeah, I can go. I have my
Okay.
stuff ready. So
Okay.
All right, hang on. Go ahead and share and let me like confirm everything's like working.
It's good because today we have the bear, and
yeah, we can
Schmitty's
make
gonna
it a
do the
sandwich.
bowl, and then I'm gonna be like the mayo,
The sandwich.
the neutral,
the understanding father.
I've got a
Alright,
bet
you
going
got it?
whether or not you complain about the UI on Zoom again.
I was thinking about it, but you guys cried about it last time. So.
way, man. Every time.
All
That's
right.
awesome.
So going forward, for me, it's pretty straightforward. So a lot of the way that I look at the lens that I look through the market is using momentum through, you know, various different methods like BBANDS, Ichimoku. I'm not a really big fan of RSI, like, because it can just, especially in bull markets, it can remain overbought just indefinitely and diverge indefinitely. But I do use it as like a point of like, oh, that's interesting that might coincide with market weakness, you know, kind of like what Jack was talking about. But I want to talk about specifically the tweet that I sent out about the most bullish thing in my system, and why this would be an easy invalidation for me. So when we look at macro B band consolidation, if you're not familiar with it, I'll just give you like the, you know, the elevator pitch. It's just basically a visualization of volatility and consolidation. So when the bands are expanding, a trend is considered, you know, underway, and when the B bands are contracting, it's a point of consolidation. And so what we look at is, when we're using B bands, is, are they expanding, are they contracting, or are they just like kind of chilling and like remaining open, right? And right now we're seeing a contraction of the B bands. And a lot of times when we see this contraction, we'll see the testing of the upper and lower bounds. And it's kind of like a question and answer. It's like, if it goes to the lower bound and it attaches, or as John Bollinger calls it, you know, like riding the bands, that can many times lead to a continuation of the test. And what we saw was the first test of this lower B band for I think it was, you know, since January. We tested the lower B band and it responded really, really well. It didn't just respond like, okay, it bounced, it closed a bullish engulfing, and it closed above the midline. And so when we look at the anatomy of the B bands, it's generally considered, if it's trending above, this is an objectively bullish trend. If it's trending below, it's objectively a bearish trend. And when it's consolidating, it'll kind of just chop in between. And for me, the way that this bullish trend, I'm assuming it's going to be bullish because I have no reason to think otherwise yet. Until this thing starts to expand and we see a close on this lower band, this to me is just otherwise this is chopping an otherwise strong uptrend. Structurally, when I look at things on the weekly time frame, well, I'll continue with the trend first. So here's an example of the market, you know, quote unquote, riding the bands or attaching to the upper band, right? So it's just been kind of riding, we get some sideways chop, then it connects again. Sometimes you get sideways chop and maybe it'll connect again. But right now it's sitting on top of the prior all-time high, which is right here. This to me looks like a very standard, granted, we still have 2 days left on the weekly, so a lot can happen in 2.5 days. But to me, this just looks like a standard support and resistance flip. We see these sorts of things happen all the time, where the market will come into a LUP, you know, something that was prior resistance before, it'll come up and it'll retest it. And this just looks like more of the same. Now, where I start to raise my eyebrows and say, okay, well, something's different here, is obviously if we close anywhere below this zone, this is like, okay, well, let's talk about mean reversion targets, and we'll get to that in a second. But that would also coincide with this daily B band failure. And, you know, obviously closing down here would lead to a Bollinger Band breakout and most likely a continuation of the downside. You know, until that happens, until we start closing on this lower band, I see no objective, even though it's like, this is sketchy looking, I see no objective reason to be bearish and assume that this support and resistance zone is going to fail. It hasn't yet. It's responded very well to the first test. First test, second test, right? Obviously, the more a zone is tested, the weaker it gets. So I don't want to see this thing getting hammered over and over and over again, because eventually buyers will dry up, supply will overtake. But for now, this looks objectively bullish to me. And when I look at, you know, I know I poke fun at Josh and back and forth, whatever, but like just using standard Ichimoku cloud, which is something that I'm a fan of. This looks totally fine to me. Like there's literally zero sign of weakness. This looks like a typical mean reversion target, which is the Kijun. And again, it responded well. I don't like that it started to bleed back the strength on the bullish engulfing. So that is kind of like, that's sketchy. But until we start closing below this Kijun, by Ichimoku Cloud standards, this just looks like a standard mean reversion in an otherwise strong uptrend. So for me, let's talk about targets of, well, okay, if I'm wrong, where does it go? In bull markets, Bollinger Band midline is like the buyback zone, right? We look historically, weekly B band retests are normal. They are, let me go back a little bit more. Weekly B band, the hell is that? I've got notes on here for quite some time, apparently. Weekly B band midlines tend to be like the waterline of a market's health. So we can see back in 2017. Oh man, I've had this on here for years, probably. Jesus.
Coming up on a decade, bro.
Yeah,
You got 2015 stuff on there. That's funny.
But the reason why I'm looking all the way back to 2017, 2015, 2016 is because I think we're more in line with that type of market condition where we're frothing in a foaming and we're looking for it's just massive capital inflow. When we look that far back, the midline that's like home base for any correction. And when the midline starts to fail, that's when really bearish conditions start to overtake. I don't think Jack is arguing that a bear market is impending. I think he's just leaning more toward like a correction in an otherwise macro uptrend. And in line with that, I mean, a weekly midline retest is, what did you say? You said 48 to 50, right? So
yeah.
lines right up perfectly.
Listen to these bears, 48 to 50.
At the lower bounds there is the yearly pivot too, by the way. Just saying.
I don't want to interrupt you, but something I keep thinking about, and we've talked about, like, what would it take us? This is like a this time is different comment, but what would it take us to actually retrace to the 20-week? Because we haven't actually done that in
to
like
the EMA or SMA?
To the 20-week MA, the Bollinger Band.
Oh yeah, the midline. Yeah.
Like we didn't do it in 2020. We didn't do it in 2019. We did it in 2016 and 2017, sure, but the market, I would argue, was much different. We did do it early in this cycle, right? But like here, I think it would take some crazy bearish thing to rip us down there. I think the saving grace is that the 20-week is going to keep moving up a little bit.
Yeah,
and then it'll make
for sure.
it'll make more sense over the next couple weeks. But yeah, anyway.
Yeah, so I think that just playing ADIQ game theory here is, I think that there are a lot of people that entered late into the market, and you kind of see this on the tail end of markets where people will, rather than ratcheting down their exposure, they'll like double down because they don't want to miss the next breakout. And I think what often happens in these strong moves, we'll go to the daily so it's a little bit more palpable, is like when these sorts of things happen where it's just like gross moves up and no opportunity to pull back. When this stuff starts churning, people who might have entered down here missed this opportunity for their quote unquote pullback. And so they get hyper exposed up here. And so it moves their entry up here and up here. And so I could easily see a situation where, it's just weeks of capitulation downward, and maybe the weekly SMA or 20 period moving average comes up, and we do exactly like what you said. That's what's nice about the Bollinger Bands is they are dynamic targets. They adjust with the market. It's not just like a hard level. This is an obvious pain point from like a liquidity perspective. But I suspect that a lot of the people that are exposed to the market via ETFs aren't, like, they're still early. And I don't think that they're the type of money that's going to panic sell a drop. Maybe that's just me being optimistic, but the fact that they're able to get exposure through traditional brokerages, and they're this early to the ETF, like most people don't even know that the fucking ETF came out. Like when I talk to my friend, maybe this is just like, small sample size here, but when I talk to my friends, like most of them don't even know that the ETF exists, A, and B, they don't even understand the mechanism, like, and why this is different than GBTC, for example. They don't even understand the difference between a spot ETF and like exposure to a basket of exposure, right? So I do feel like the likelihood that we just like see a whole slew of panic sellers through here is unlikely. But this is all speculation, of course. And I'm just rambling at this point. But for me, the TLDR here is this looks like a macro SR flip retest sort of dealio. B bands are contracting. Market is not closing on this lower B band. And until it does, and it still starts closing down here, like going down to 48 is just not even on the table for me. Like that's out of the question. When we look at the weekly time frame, we're still riding this upper band until it starts closing below here. This is not on the table for me. It's and usually these retests are on the heels of like blow off sorts of things. Like when we go back to 2017, like we don't just retest this thing because it's cool. We retest it because it's like we got way overbought and then it slams back down. We got way overbought and it slams back down. Like these are the sorts of reactions that get us down there. And that's not really what we're seeing. We're kind of just seeing like, this is normal. This is just healthy stuff.
So you're just saying you have a decision tree, and until you check some certain boxes, like you're not
yeah,
like
yeah. I mean, for
eyeballing that
me,
area.
yeah. For me, I know that me personally, I have a tendency to want to be counter the narrative. And the way that I hedge that is by looking at my objective tools and where those mean reversion targets might lie and what are the conditions that would get us there. And for me, if I were to plug this into my decision tree, this says, okay, we're just marching up support and resistance lines. Cool. Trend is super healthy. We're not overbought. I mean, again, we do it in these short-term overbought periods, but it's not like knifing up here. Like if we got something like this, where it's just like, holy shit, yeah, reaction is definitely coming. Like that's a perfect storm for a mean reversion target. But until we start breaking this is like very cut and dry for me. It doesn't seem like anything to get terribly excited about.
I got a question for you on that chart.
Yeah.
There's that weekly doji outside of the bands. Is that anything at all? I'm not a big, like, I don't study Bollinger Band stuff. Does that mean anything?
Yeah. So the short answer is maybe. Like here's an example of the exact same thing for reference, right?
Mm-hmm.
Weekly doji outside the B bands. I can point to examples when we had weekly dojis that did yield a big pullback. Apparently I can't, but here's another example of a weekly doji that's outside the B bands. Like dojis are, for those who don't know, it's like, this is what a doji is. Like when you have this little plus sign type thing, sometimes the body's a little bit thicker, but all that is just a point of indecision. That's neither
Mm-hmm.
bearish nor bullish. It just says we have the opportunity to pull back here. What are we going to do? It's like question and answer time. It's like, are we pulling back here or not? And then the bulls will either say, fuck no, we're rallying, or the bears will say, you guys are toast, right? So yeah, short answer is maybe. I could find more examples on the daily where that's
Right.
the case, just because there's a higher sample set. But on the weekly, it usually means just wait, like see what it's going to do. Is it going to reattach? If so, cool. If not, maybe it means that we're going to do something a little bit deeper where we pull back 20% or something. And we're already seeing that, like top to bottom here, we're 18%. So like this is normal. 18% pullbacks is totally normal in a bull market. So
Mm-hmm.
anyway, That's all I got. So I actually, sorry, one more thing.
No, you're good.
No,
We
no,
got plenty of time, dude. Don't
no,
rush.
it's over. It's over.
We got a half hour here. I
Okay,
got 35 charts up, so I got plenty of stuff to talk about.
Schmitty, I'm just making sure you know your whole desktop is being streamed, not just that one window, just as an FYI. Like I see your start bar at the bottom and stuff like that.
Oh, that's fine. I don't give a
Okay.
shit.
All right.
So the CME chart, which is something that I defer to a lot because it really reduces a lot of the weekend noise. When we look at the daily B bands here, like same story. Actually a little bit more bullish because it didn't even make it to the bottom band, and the B bands are more consolidated. If I see this closing on this lower band, again, that's going to be okay. Well, let's reconsider here. When I look at the Ichimoku cloud, this looks totally normal. This looks totally healthy. And if we start closing below this Kijun, then okay, maybe I'll reassess. Maybe that says something about my assumptions here were wrong. But until we start closing down here, CME chart looks normal. When I look at the weekly chart, the cloud isn't very insightful. It's kind of just like overblown. And sometimes this will catch up, sometimes it won't, you know. But when I look at the B bands, same story. We're making the attachment here. And yeah, it's, you know, it's dipping back down. The one thing that is slightly different is this support and resistance zone on the weekly chart. It does get redrawn slightly differently. Just because it's like a little bit choppier. Like I don't really know how to draw this. I guess it'd be like something like that, you know. Maybe drop it a little bit further down. But something along, you know, something in that ballpark. But again, another SR flip, support and resistance flip here.
Are you on the cup and handle camp if we retrace to like, I don't know, like what's the 50% from high to low there? It's
of this whole leg.
Yeah. It's probably like what, 38 or something.
Probably that yearly pivot, yeah. 36.
Yeah,
38.
almost exactly 38. Yeah.
So as long as we can hold, like, there's a world where we go to 48, or sorry, 44.7. There's a world where we maybe go down there and then, you know, we get calls for cup and handle or whatever. It's again, it's just so hard to think.
Inverted head and shoulder.
Yeah,
or
like
that. Yeah. But again, it's like how do we get there? We would have to see outflows from BlackRock. Like I don't know of any other way. Like sure, like the code is fucked up or something, but like realistically, what's going to take us down there? I don't know.
Yeah, that's what I keep asking myself too. Is that like okay, you know, there are things that structurally make sense, but fundamentally, exactly like what you're saying is like how, like how does that like what are the underlying mechanisms in the market that force this to happen? I can't conceive of those things. You know, like this reaccumulation range here was the release of the ETF. So are all of these people going to all of a sudden get dunked on? I don't know. That would require a lot of people selling a lot of ETF exposure to get us there. And I'm sure you're probably going to bring this up too. I don't have the numbers ready, but bro, once the halving kicks in, the percentage of new Bitcoin that ETF buyers on average are soaking up is going to be highly skewed in the bullish fashion. I mean, the halving is, you know, somewhere over here. Historically, the reason why we see these big shakeouts, for those who don't know, is like, it's not because we're bearish going into the halving. It's because this is like the last ditch effort to get deep exposure on the last free floating supply in the market before it gets cut in half. And so we see these aggressive moves down to scare people out of positions before we move. And maybe that's still a thing that happens, maybe, but that just, I don't know. I have a hard time believing that is.
Well, what I thought you were going to say is because we're so bullish pre-halving, we dump around halving.
That's kind of where I'm at. Yeah.
We also
like post-halving, or what do you mean?
No,
like
we
sell
have
the news kind of deal.
That, by the way, looks like a head and shoulders all day to me. Like that is the clearest. This is one of the reasons why it's a good idea to look at the CME or like the legacy stuff every
Yeah.
once in a while, because man, if you don't think the spot chart scares the shit out of you, that chart scares the shit out of me. Like, wow. Anyway, yeah. So pre-halvings, historically, we run up so hard that yeah, we blow off some steam, right? Or there's some bullshit that happens, COVID and or Bitfinex gets hacked. It's kind of like
Yes.
Black
Yeah.
Swan.
There's always something.
Yeah.
Yeah. I because there's so much
God, that's
legitimacy
ugly.
in the
That's so
ETF
ugly.
space.
Oh, yeah.
Yeah. I mean, and if you're thinking about like a quote unquote, I hate doing these like thought experiments of like what is max pain, because it's like one person's max
Well,
pain
it's
is
good
one
to think
person's
about
max
it. It's good to
pleasure, you
think
know.
about it, right?
But this would essentially be an entire retest of the reaccumulation range we broke out of, which would just be absolutely brutal. But you're right. Like this CME Head and Shoulders looks infinitely cleaner than the spot one, and that's why I love these little filters. But again, until this gets down here and closes down here, which is obviously going to coincide with the B bands, and exactly like what Jack was saying, there's going to be a lot of confluence with whatever your system is. A close down here is going to check off the we're fucking short-term bearish here. Like, I don't care what your system says. Like, you're running out of lifelines when it gets down here, right? So
Yeah.
But I also suspect that if we get here, I don't think it'll be something like this. It would be something hyper aggressive, because the ride that we had up was hyper aggressive, and there's this concept of like gaps in markets, right? I don't have to tell you guys, but I'm explaining to them. Markets will gap and they will become inefficient. And what that means is that there's no structural, it's like you built a house without a proper foundation. Like, we don't have any structural support under here. So elevator up is going to yield an elevator down. And depending on how exposed people are to the market, like this could just blow right through this and then wick, something like that. So if we do start closing down here, like, I'm not going to be a bull tard. Like, I'm going to be objective. I'm just waiting for my objective signals to say, okay, change your mind, and a close down here is definitely oh shit territory for sure. Like, being bearish on a Head and Shoulders neckline break, or sorry, being bullish on a Head and Shoulders breakdown is, you gotta have balls of steel there. Yeah. Like, best thing that happens here is like it goes here, retest, traps the last people and dumps. Or maybe it's like we're all getting it cucked. It drops down here and it goes psych and closes up here. But risk to reward here is so clean. It's like, okay, it closes down here. You're bearish until it closes back above.
Yeah.
I'm sorry. Yeah, you're bearish until it closes back above. So anyway, all that to say, watch the CME charts, guys. They're a filter for a lot of inefficiencies in the market where we see these giant wicks, weekend trash, and all that.
I was looking at like the BitX chart or the IBIT chart, and there isn't much there yet on either of those charts. But this definitely, yeah, because previously it was the GBTC chart, which is probably just as valid now.
Yeah.
But yeah, that, man, wow. You mentioned a house. There's this super esoteric, not common chart pattern thing. It's like 3 valleys in a domed house or something.
Do you want to share your screen?
Yeah, if you're done.
Yeah. The only thing I'll say is, as a representation of just how inefficient this move up was, I talked about that on the CME chart. Well, traditional markets trade even less hours than futures markets, and just look at all these gaps.
Yeah.
These could be filled. Typically, we see gap
be.
fills and things like that. So like, this is just to visualize how inefficient this move was. It was just gap, 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 and euphoria all the way up. So
I blame that more on the 24-hour market than, like literally gapping up overnight or something. But you're 100% right. Those gaps are still there. All right.
Josh is up.
We're doing it. Oh, wait, hold on. Sorry. I lost my screen. It's not on here. There it is. Is that right? All right. Oh man, the UI. Oh, how do you guys can't see this?
I gets me every time.
All right, I got a bunch of charts. We're gonna speed run this a little bit, but you know, this whole hour has basically been if we make lower lows, it's over. That's basically what we're talking about here. The bigger issue is the money that brought us up here is slowing down.
Get flashbanged, chat. Suck it. All right, keep going.
It's not about, you know, there's a fundamental argument, there's a structural argument, there's technicals, whatever, right? Seasonality is not really on our side either. There's taxes. It's March. March is usually trash. It's the end of the quarter. There's some weirdness with allocations in portfolios around the end of the quarter, right? We're still super early getting this stuff connected. Like all of this inflow has been early adopters. So we will see. There's zero doubt in my mind. There's an infinite amount of money coming our way. And you just have to keep that in mind. If you are one of these turbo bears, which I don't think any of us on this call are, but like below 50, again, it's hard to see how that actually happens because there's just so much money waiting. You know, maybe legacy, which I'm going to argue, maybe legacy rolls over a little bit. But anyway, the flows week over week are down pretty significantly. Mostly it's GBTC coming out, but the bigger issue is the inflows have also been pretty soft, right? This will probably be our biggest outflow week net. I don't think it's the smallest inflow week, but you get the picture, right? Last week it was record inflows, literally 2.2 billion net inflows. This week's going to be record net outflows. So you can see the indecision in the market or the contemplation or just the waiting, right? So yes, the flow is not exactly on our side this week. The flows are telling you what you see in front of your eyes with price. It's not like a surprise, but anyway, the other thing is the outflows. We being the smarter chain analysts, they think that GBTC is selling and then Genesis is actually buying Bitcoin. So there's an argument to be made here that the net outflows actually aren't as detrimental as people think they are. This just represents BTC coming into the Genesis wallets again. So it's weird. Like, why are they doing this? I don't think anybody knows in particular. Are they done with the Gemini Earn stuff? Are they paying people back in kind for something? I don't think anybody knows. But as bearish as the outflows look, they're actually net, like not that bearish, right? Assuming that this is happening, that Genesis is buying this back. Last thing about ETFs, this just came across the wire about BlackRock. Not seeing a lot of demand for the ETH ETF from clients. I am with the Bloomberg people in general that the ETH ETF probably doesn't get approved in May. I think it gets approved eventually. I think the SEC will not win a case in court. But if you're, all in on ETH on some leverage trade because you think ETF's going to get approved, I'd be careful on that. I don't know about how you guys feel.
Not only just that, but like if Bitcoin drops, I don't give a fuck how maximalist you are in Ether. That thing's coming down too. So if there's a lot of people on the end of that trade, the bullish end of that trade where they're on higher leverage, they're going to get rinsed and quickly.
Yep. Also, ETH hit like some pretty key targets that have been on the charts for like a year. What was it, like 3,500 or something? Like it smashed it. Mm-hmm. It was great. It was a good trade, whoever took it. But now what? There's not a lot of wind in the sails of this thing. It's not like the technicals are on its side or anything. It's like you said, it's the Bitcoin show. Whatever happens there happens to everything.
Exactly. And people get a little bit too greedy. They get excited about the ETH or the Bitcoin ETFs. They want a Sol ETF. They want a Doge ETF. That stuff will probably happen in our lifetime, but it probably won't happen this year, right? And again, the SEC is going to lose this. Ethereum has lobbyists. Coinbase has lobbyists. They have tons and tons of money to throw at this over time. But in the near term, I'm not too bullish on that actually getting approved this year. As far as the daily real crypto settings for the cloud on Bitcoin, I've just been watching the 56K level because that's the daily Kijun, the red line here. Since we broke out at 43, we had a nice inverted head and shoulders with a bullish TK recross with price above cloud. All this is screaming bullishness. breaking that yearly pivot, consolidating below that yearly pivot, screaming continuation. Up here, this is not, you know, we've talked about it over and over, but this whole structure is not screaming continuation to me. I think best case is like an inverted Adam and Eve, and this is like the Adam left, as they call it. This is the V, and maybe we make some pitiful attempt back to 70. But just in the near term, this does not look good for continuation in the near term. And 56 would be the no doubt about it support level on the way down. The other alternative level would be 52.5, which is the yearly pivot, which is where we broke out, right? So you're basically rinsing the entire breakout, you know, out of the market, which I'm not going to rule out. It's a possibility. You know, this doesn't look happy up here, right? Schmitty talked about the weekly B bands on the 20, the traditional settings for B bands here. We talked about this, but having this doji close red, close as a spinning top, open and close above the weekly B bands, coming back into the B bands, this again just doesn't scream continuation to me. The 20 week is going to continue to move up. I don't think we're going that low. I think we're going to go to like 56 probably is the lowest we're going. But again, this doesn't give me confidence that we're going to see continuation. On the 4 hour, much like the breakout in February, okay, we have the same exact type of setup here on the 4 hour, where we have a inverted head and shoulders in the making, complex inverted head and shoulders, whatever you want to call it, that with the cloud may tell you exactly what to do. You know, I'm looking at this like a hawk for the next 2 weeks. Okay, if we're above the 4 hour and we break this diagonal, all the cash I have on the sidelines all back in. It's also kind of telling you, look, if we make a lower low, we're below the yearly pivot here, we're below the 4 hour cloud. There's not bullish reversal hopes if we continue to break down. On top of that, what we will probably see, which is why I'm a little concerned about the calendar into the end of this month, we will probably see the outflows for GBTC just cease, and we'll have big inflows again. I won't flashbang people, but if we go back to the 43K break, that's what we had, right? We had the outflows were done, right? The maximum outflows were basically mid-January. And then by February, the outflows were over. So if we see that again, this makes logical sense. Quarterly roll, outflows come back, yada, 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 right? Now, the 29th, next Friday, is Good Friday. So that's a market holiday as well. And if we can survive the 29th, 30th, or whatever, however many months are in March, if we can survive that weekend into the quarterly roll with GBTC outflows declining significantly, you know, I think we'll be okay. But this is very much an if this then that situation. You know, basically what we keep talking about. And now the rest of this, I'm gonna flip around to a bunch of different stuff. Dominance still looks incredibly bullish to me. It's got ascending triangle vibes. It's got rounded something vibes. I don't know. It doesn't look pretty, but it doesn't look bearish. You know, this is bullish on the weekly cloud. I still think this goes higher. It goes higher if alts sell off more. It goes higher if Bitcoin, you know, goes higher quicker than everything else. But I think it's very difficult to fade this right now. The Bitcoin strength, right? Your alt does not have an ETF. Now there are exceptions. If if I'm looking for stuff randomly, I'm talking like in the next 3 to 6 months, probably into Q4, right? There are charts out there that are setting up that look okay. This is a random chart. I don't own any of this. Ocean BTC. This is the type of stuff I would watch. Multi-year, just chop, right? Just, I don't know what this is. I don't care. But if this gets above the horizontal resistance, sure. I like that as an alt trade. But we're talking months away. Like, you'll forget about this by the time this breaks out. The same thing with Maker. Maker BTC has been nothing but chop. Maybe this breaks out, maybe it doesn't. But this is the type of stuff I would watch if you're an altcoin person. Look for a setup that hasn't broken out against BTC yet, that has a chance over the next 3 to 6 months. Now, ETH BTC, a lot of people, back to the ETH ETF, are just so turbo bullish on this thing breaking out. They're like, oh man, this candle in January, it showed how underexposed to ETH people were. How's that worked out for you? How's that worked out for you? You know? So this potentially continues to set up as a diamond bottom potentially. I think this will fail because I think the ETH ETF doesn't get approved. Okay. If I'm wrong, this goes to 07, 08. But if this starts to make lower lows, which it already tried to a couple days ago, but if this starts to make lower lows, ETH BTC is in trouble for sure. And to me, the trade is thinking about buying this at like 039. Okay, like I'm not sitting in this being a hero here at 055 or whatever this is. This is a much better trade if everything sells off. Much like going back to 56. Like we go to 56 on Bitcoin, that's easy. I buy that, right? There's no question. If we go to 52, who cares, right? I bought 56. Okay, whatever. But ETHUSD already retraced to its daily Kijun on the 2061 2030 settings, and this continue to just does not look happy up here for me. I don't know about you guys. You didn't really talk about it, but
that looks
yeah,
ugly.
I mean, rejecting the Jenkin after a bullish engulfing is exactly what Bitcoin just did. It's like you had your sign of strength and it just limp dicked all the way through the continuation.
That was your moment.
Yeah, I think all this is just going to be turbo chop the rest of maybe into like mid-April, right? Like this is just going to need time. This may play out as, again, another like better reversal pattern or something, but to sit in a leverage long up here and wait seems a little bit silly to me. Now, the alternative side to that argument would be similar to Bitcoin. If we dial it down to the 4-hour, there is a case to be made for inverted head and shoulders in the making that may break out probably around 34K like into April, right? So this is just on the watch list for quite some time. But this is definitely bearish on low time frames. One other issue that this move has had, using the trailing Williams fractal stop losses, it told you to get out at 38, which is what I did. The only ETH I own right now is basically for transaction costs. But the other way to look at this is on the bullish side, once we get our resistance fractals printed days from now, that would be the other opportunity to add to a long, open along, whatever, get back into spot. So we are so far away from any sort of signal here on ETH for me that says it's okay to get back into spot or whatever, right? This would be the first thing, I think, on the 4-hour. Maybe it survives at the yearly pivot at like 3250. I don't know. But if Bitcoin makes lower lows, ETH is probably headed to 28. That would be the level I'd be watching. Sol, I'm in a short on Sol right now because of this chart right here. It's a messy 4-hour head and shoulders. It, to me, clearly like the dumbest of dumb money is in this thing, along with all the other meme coins. It's got a bearish edge to edge. Again, there's nothing redeemable here.
You're not gonna make it, bro. You're just not gonna make it.
I know. It's over.
In GMI.
Maybe this goes nowhere. Maybe this is just noise, right? But to me, it's leaning bearish enough after this mega move for the past 2 weeks that there's a little meat on this bone on the short side, right? 130, 150, whatever it is. I don't think we go to 120 on this move, but I like the odds for 130 to 150. There are a few other random alts, right? If you're just looking at cloud, that potentially have consolidated enough. I have the wrong cloud on here, but you get the point. If you're getting a bullish CK cross with price above cloud on anything, there's a decent enough reason to buy spot, whatever, right? The problem is, okay, you're bullish SUI, but Bitcoin drops to 56. Like, yeah, this is coming down too, right? Like, it's not just going to get saved because of some technical thing on trend or whatever. So there are some things out there that look okay on crypto, but for the most part, I would be very careful here because you just know alts are going to retrace. If Bitcoin goes down another 10, alts are down 20, 30, easy %, right?
Yeah, I mean, it wouldn't be the first time we saw something like that happen where things are looking bullish. A lot of good bullish setups on alts that get smashed, but they just recover faster than Bitcoin on a bounce,
Yeah.
Like that's not unheard of.
Yeah, no, I agree. You just have to be patient here. It's tough if you're if you're out of the market or you're looking for trades, you're like, oh man, I need to deploy, blah, 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 or allocate. I just think you'll be so much better off in the next 2 weeks if you just wait, let the market figure it out. In the last couple of minutes here, a bunch of legacy charts. So Powell had a meeting, press conference this week. He came out and he was super dovish. He's like, inflation, okay, the last 2 prints, no big deal. Unemployment, yeah, it's an issue maybe, but so far we're good. He hinted at QT tapering. All this stuff he's basically saying, like, rates are coming down. We're going to weaken the dollar effectively, right? So yesterday or 2 days ago, Dixie, it's hard to see on this chart, but DXY came down a bunch. Bitcoin went up, right? The SOL went up. There's this Powell rally we had. Now, since then, we've had the rest of the world coming out and saying, actually, we're going to be cutting quicker than the US is cutting. So now on a relative value, the DXY is up again. And the problem here is if this is acting as a reversal pattern, I don't know, right? This is just kind of random walk chop, right? But if this plays out as none of us hope it does, which would be all the way back to 112 or something, like we will be hurting on the crypto side for a little while, if that's the case. Not saying this is going to happen. It's just something to watch for, right? If you look at the euro, which is basically the inverse of DXY, this is also a case. This to me is more slam dunk that this is a diamond top potentially, which would be a bearish reversal for the euro. So we just really have to dodge that. Now the S&P has been on a tear for weeks and weeks and weeks. Okay. I'm not one of these people that, oh, we have to be bearish because we're up at all-time highs. It's just we're in this awkward spot where it's been up only for a long time. And the upside target is still there. Okay. The RSI, I don't know what's going on there, but that's coiling, obviously. If we zoom in on this channel, it looks like a hot mess to me, but it's still not bearish yet. Okay. But if this starts to roll over, that would be another reason why the rest of crypto rolls over. Like if we're below 5,000 on the S&P or something, and then we're in trouble. I think that's how Bitcoin gets to 56 super easily. This chart just looks, it looks crazy, right? It's just up only. The Qs are another one. They clearly have been bullish, are bullish. There's no issue here. It's just like, where do you buy this? I don't know. I don't think it really matters for crypto people, but as long as this holds its trend, we're good. But if this starts to roll over, it could get ugly.
That top looks like it's starting to round out on your last chart. Like you'd almost do like a parabola from probably, what is that, like 2024 to present, starting to kind of like roll over.
Yeah, it is. It's slowing down for sure. I don't think it's bearish enough to say like, oh, like if this closes into the cloud, then we can talk. But
sure.
So far, it's okay up here. Another concern for inflation is the energy issue. Oil is starting to close in the weekly cloud for the first time. Well, I guess it has been for a couple of weeks now, but there's this macro, like multi-year head and shoulders potentially that may play out. I don't know. But again, like if DXY is up, if oil is up, if inflation is up, like this is all bad for risk, because then the Fed is less likely to cut or more likely to run into issues with all sorts of stuff, right? Just something to watch on the periphery to think about. This is another chart, XLE, which is an energy ETF. Ascending triangle, price above cloud. Like this thing looks phenomenal to me. It's been up only for weeks. I get it, but this looks crazy bullish, which is a problem. Big problem for crypto, for risk, for everything else. As far as the chip stuff, NVIDIA, SMCI, looks a little tired up here. I don't think it's like, the SMCI looks worse to me than NVIDIA does, but again, it's like the momentum on the highest risk stuff is slowing a little bit, and that may be enough to just roll everything over on the crypto side, right?
Dude, I don't know, man. I keep looking at NVIDIA, and every time I look at it, I'm like, surely this is going to pull back. And then I look at it on the weekly BBANDS, and it's like the healthiest trend imaginable. It just keeps not getting overbought, not getting, anything. It just rides the BBANDS, and it's like, where's the top for this freaking thing? And now we're seeing RTX start to break out too. So
Which one's that
I
one?
don't know. RTX?
Yeah.
RTX is they make they make chips as well.
Oh, okay. Gotcha. Yeah, you can't short NVIDIA. You can't. I don't think you can buy it up here either. But that's just me. Like, yeah, that the train has left the station on that one. But again, something to watch on the periphery. Like if you're trading render or some AI coins, right? If this does roll over, you're kind of SOL on the AI coin side. MSTR continues to confuse most people who are using logic. There's mega short squeezes going on in this thing, and people keep trying to short it, and that's going to help keep it up because it's basically moving up more than Bitcoin every day. I don't think this is a buy until it retraces back to the midline of the pitchfork, if that ever happens. But again, this is not a chart for me up here. The premium to NAV doesn't make sense. But you also can't short this either because again, it's it's like GME, right? It's just anyway, short squeeze on that. Of all the Mag 7 here, I like Google the most. It's got some fundamental AI stuff, even though their Gemini thing was a disaster. I like the structure here. The daily cloud is also pretty bullish. So there's other non-crypto stuff, non-NVIDIA stuff to trade. So I like that a lot. This is Tesla. It just looks awful to me.
It looks terrible.
Looks really bad. I'm super bearish on the prospects of anything there. It's just like there are people forcing trades on stuff like this, and I just don't understand. Just like, yeah, you might not like Google, but this is a much better chart to trade on the long side than Tesla, in my opinion. Then there's a few others that are kind of crypto adjacent. Square, I keep beating this drum. Square looks fine to me. Long-term cycle hold throughout post-halving. They sell Bitcoin. They sell Bitcoin wallets. Hood is another one. Crypto adjacent.
Yeah, Robinhood for sure.
If Coinbase is doing well, Hood probably does well. Coinbase is doing great, right? If IPOs pick up again, there's all sorts of like stupid reasons why Hood does well, but I like that chart a lot. PayPal, even for the first time in years, has started to look decently okay.
I actually longed PayPal in that first breakout, kind of on your right shoulder where it started peeking out. Yeah, and I've been sitting basically underwater for like that whole time. Okay.
I don't hate it, but again, like if you're a crypto person, like looking for stuff to do, like me, right? Like I'm waiting for Bitcoin or whatever. There's other stuff that doesn't look. It's been beaten to a pulp for years, right?
Right.
That kind of looks like Zcash.
It does.
Forever downtrend.
And then quickly, the last three, the miners. I don't like miners as a rule. Generally, I don't know if any of these survive post-halving. The miner people are a cult. Okay.
Ooh.
Anybody in CleanSpark, anybody in any of these names, if you talk bearish about them, they will just pile on you. But WULF is one, along with a few others here, that clearly this is coiling like for over a year now. If you're bullish on this, yeah, I like it, right? I don't know how you guys feel about a chart that looks like this, but
well, I'll tell you what I'm seeing from like a Wyckoff side. If that exploded downward, right, ran those lows down to your orange support line, maybe threw it for a few days and then back, and then went up, that would be the cleanest accumulation range. Because if you have this horizontal across 350 all the way across, and then another horizontal at like 60 cents, it's kind of like that Litecoin chart I put out, which was like this doomsday scenario, but it just would paint a really pretty picture. That would make me all in on something like this.
I think if you're in miners, you have to be careful of headline risk and like random bankruptcies and M&A and stuff like that into halving. The ordinal stuff hasn't returned yet, so the fee revenue there hasn't returned. I don't know, like maybe these are all just default bullish because Bitcoin's bullish, but I'd be super careful. IREN is another one, has been consolidating for 2 years plus now. Some of these are pivoting to AI, some of them, it's a mess, the miner landscape, so you got to be careful with this stuff. But I don't hate the chart that looks like this, that's just been trash for kind of 2 years here. And then the last one, something like this could literally go to zero, so you got to be careful. And again, I know the miner people are going to be after me saying that, but much like Hood, I would rather buy this on the breakout than fool around with it down here at 410. So that's just me. I'd rather buy this at 9 and be
Yeah,
sure
100%.
than think this is the low, you know. So yeah, everything. Go ahead.
No, finish that.
I was gonna say everything relies on Bitcoin not going to 56 here if you're bullish, but the miners, you just have to be careful into having, because some of them aren't going to make it. They just aren't. They're going to get acquired, or they're going to sell whatever, or they're going to pivot to AI something, right?
While you have your screen up, can you pull up the monthly Bitcoin chart? That's something I meant to touch on, but we can just cover real quick.
Yes. Hold on. Sorry. I gotta stop the share.
Because your mean reversion target for your Kijun, right, is like 58, 56, something like that. What is it?
56.
Yeah. So I'll just talk through this while you're getting that. Slapping the monthly BBANDS, which is crazy to say, but slapping the monthly BBANDS on Bitcoin is a really great test to say, like, okay, is this rally likely to continue for a year or two, or is this just a flash in the pan? And right now, the monthly Bitcoin chart is obviously expanding. It's been expanding. It's one of the reasons why I was really bullish going into that range in like the 42K area, because it was getting that upper riding the B-bands mode. But obviously, looking at this chart, it is super outside the B-bands, which on the monthly time frame is like bananas, right? And so when we look historically, what happens with charts that do that, they tend to mean revert. They don't stay outside the monthly B-band long. And if they do, there is at least a wick of the upper band before a continuation. And the upper band is right at your Kijun target. So it also is in line with a potential like deep test of that support and resistance zone of the all-time high. So yeah, we still got 9 days on it, but it is currently painting, if you know what a swing failure pattern is, it's painting a swing failure pattern with that wick taking out the prior all-time high. And so that at minimum, if it closed, obviously it has to close there, but the target for that would be at minimum that upper band. And at worst would be the next level of resistance, which would be 47, 48K. So a lot of confidence here. If the monthly fails to close above the prior all-time high at 69K, there's a lot of things that are going to say, well, okay, like we're probably going deeper whether you want it or not. So yeah, just something to keep an eye on. If you're like a macro trader and you're like, okay, well, I don't care about these daily 4-hour charts, whatever. Well, monthly is about as macro as Bitcoin gets before it just gets too high time frame, right?
Interesting.
Yeah.
One last thing.
So,
with the RSI, this is something that a lot of people are also pointing out. Like, once the RSI breaches 70 on a monthly chart, it's typically like that's the bull trend, right?
Yeah.
So we're still very early and for a lot of reasons, but yeah.
Yeah, but when you were showing your monthly B-band chart there on BLX, you can just see it's like every parabolic market begins with a B-band squeeze and an expansion. So we can see just how, assuming things are the same, right? We could see just how early on we are in this. Unless something just fundamentally just goes to shit, like there's no reason to assume we don't just keep riding the bands and we don't just retest it and move onward and upward and onward.
I agree.
Good stuff, boys. Good stuff. Chat, you got an extra 10 minutes today.
Well, we were a little late, or I was a little late. But by we, I mean me.
All good, man. No worries. What else? Anything else? I thought this was funny. Let me show you guys this screen real quick. Yeah, here we go. Ozzy put this out. He said
Yeah, I saw that.
And then he said, you said something about you're the mayonnaise in the sandwich. And so he went and made these.
Is that from ChatGPT?
Yeah, yeah, yeah.
Whatever.
A little AI image creator thing.
Why is it puking the mayonnaise?
Anyway.
That's
All
funny.
right. Well, that's funny. Well, boys, thank you for your time. I appreciate it as always. Thanks for hanging out. Chat, thank y'all for vibing with us. We will bid our adieus. Josh, Schmitty, anything y'all want to shill? Schmitty, you want to say your YouTube one more time for everybody?
No, I think my YouTube's pretty defunct. I haven't posted anything in like 2 years. So
Okay. Josh, you want to shill yours?
Yeah, Carbonoctum on YouTube, Twitter. You know, if you just search Carbonoctum, it'll pop up. But do videos basically every day, stream once a week, and then stream with you guys. So we doing a lot of content.
Yes, sir.
I will say we should probably do another stream next week because it'll be right before the monthly close. So
Okay. I'm down.
volatility is going into monthly closes is always something to watch. So
Schmitty's pot committed.
He's pot committed. He's
Got it on the
in.
book.
It's done.
actually,
Nope. It's
Yeah.
too late.
yeah. All right.
No, actually. All right. Well, thank you, boys. We'll see you next week then.
Sounds good.